Welcome back. It's time now to take a look at the top business stories. Dubai's positive economic outlook to aid UAE's growth. Competitiveness key to growth of Dubai's logistics sector. And S&P threatens to downgrade Italy's credit rating. Let's look at the UAE stock markets first. The DFM and the ADX both ended lower today. The DFM lost 2% to close at 1,546 points. Arab Tech Holding fell 3%. Aramex was down 0.6%. DR Development lost 3.2%. Drake & Skull International dropped 4.8%. And Emaar Properties was down 3.2%. Dubai Insurance, however, gained 0.9% and Emirates NBD was up 0.5%. 171 million shares were traded, valued at 192 million dirhams. And over in the capital, the ADX fell 0.6% to close the day at 2,631 points, with the real estate sector losing the most. Alder Properties lost 4.2%, Zuru Real Estate dropped 2.3%, and RAK Properties fell 5.2%. The energy sector was also down, with Dana Gas losing 1.5% and TAQA falling 0.8%. Stocks to gain were Bank of Sharjah, which gained 1.9%. Biggest gainer, however, was Abu Dhabi Shipbuilding Company with a plus of 7.7%. 81 million shares were traded today, valued at 103 million dirhams. And let's now have a look at the GCC markets, which ended mainly lower today. It was a mixed week in the currency markets. Last week, the euro-US dollar was able to snap a 2-week slide to close the week slightly higher, despite rating agency Fitch downgrading Greece by 3 notches. And it was also a busy week for the British pound. To talk about this further, we are now joined by Gaurav Kashyap, head of DGCX trading at Alpari Middle East DMCC. Welcome, Gaurav.
Thanks, Linda.
Good to have you on the show. Now tell us, it was a busy week last week for British pound traders. What's on the agenda this week?
Well, it was a busy week, Linda. We had a very full economic calendar for GBP traders. We saw the pound trading in an extremely volatile manner between 161 and 163 levels last week. We started off with the inflation data, the consumer price index reading, which showed once again price growth in the UK, which once again triggered doubts and questions if the Bank of England will be pressured to increase their rates. So this momentarily took the GBP up to 163 levels before the Bank of England meeting minutes released on Wednesday showed that there's no change in the voting pattern. So the GBP finds itself in a very funny position, and obviously after that, no change in the meeting minutes. And with a poor unemployment reading, we saw the cable GBP USD hit 161 levels. Now, looking at the trading week ahead, we do have another very important slice of data, which is going to be the UK GDP reading. From 2 weeks ago, we had the inflation report, which was showing that the growth in 2011, overall GDP growth in 2011 is slowing down a little bit. Quarter-on-quarter growth is expected to come at 0.5%. But, if we get numbers that are in line with what is expected, 0.5 on the quarter-on-quarter and 1.7% on the year-on-year, we can probably see the trend to be a little bit weaker for the GBP USD ahead.
Let's look at the Canadian versus the US dollar. Now, the Canadian dollar posted a 2-month low. Why was that? What's going on between those two?
Well, Linda, there are 2 main things that we're looking at driving USD Canadian dollar pricing. 3, actually. Well, first of all, of course, we've seen the US dollar index break out into new highs, new monthly highs. That has been one supporting factor in the USD CAD's appreciation. Secondly, on Friday, we had some more consumer price index data coming from Canada, which was a lot lower than expected. And as you know, and as we've been telling our viewers, that these types of news, put these rate hikes on hold, which will, as a result, weaken that particular currency. Plus, we had a slew of retail sales, which were very negative. Some showed backwardation in Canadian retail pricing. Some were completely unchanged. So that also is what has led to a weaker Canadian dollar. And finally, of course, we have weaker crude prices. Canada, as you know, is a very large exporter of crude. It relies very heavily on their crude exports. And as a result of weaker crude prices, Canadian dollar also usually tends to slide on that news.
Hurts their economy. Thanks for coming in today, Gaurav. Good
Always
to have
a pleasure.
you here. Wonderful. And now to our top stories. Increased confidence in Dubai's economic outlook, together with a strong oil price, will help raise the UAE's real GDP by 5% this year, according to a report by the National Bank of Kuwait. For next year, the bank forecasts the UAE's GDP to grow 4.7%. Experts see growth accelerating off the back of higher oil prices, improvements in the trade sector, and regional growth. The report also stated that lower than expected inflation will boost the UAE's global competitiveness and support real incomes, which will in turn help the consumer sector. Also, there has been significant improvement in the financial sector through debt restructuring deals, which has made the market more transparent. Strong growth in Dubai's logistics sector is a priority for the Department of Economic Development. The DED and a group of logistic companies based in the Emirate gathered to exchange views on how to boost competitiveness in the sector, as it is a driving force for Dubai's economy. At the meeting, the DED announced that it will be launching a collaboration group called the Dubai Logistics Cluster Platform on the 1st of June. According to Sami Al-Kamzi, the Director General of the DED, the new platform will serve as a tool to facilitate better communication among all stakeholders. And in our fast financial news, the private sector has urged the UAE Central Bank to put pressure on the banking industry to reduce interest rates, which are often between 9 and 10%. That level is one of the highest in the GCC. They called on the central bank to set an interest limit on loans and to establish a fund to refinance mortgages of citizens and companies to help borrowers, as that will in turn help the economy. Dubai Aerospace Enterprise, a company specializing in maintenance, repair and overhaul services of planes and aircraft leasing, recorded a net income excluding non-recurring items of 143 million dirhams in 2010. That is 8 times as much as the 18 million dirhams posted in 2009. Revenue for the full year came in at 5.9 billion dirhams, up from 5.8 billion in 2009. And after the break, we'll run you through what's making the headlines in international business today.